sit back and relax. You're listening to episode 280 of the Wealth Tech Today podcast. And I'm your host, Craig Iskowitz, founder of Ezra Group Consulting. This podcast features interviews, news, and analysis all about the trends and best practices of wealth management technology. My guest for this episode was Bill Capuzzi, CEO of Apex FinTech Solutions. We had a great conversation. We talked about their Ascend platform launch and their Astra platform, which is their advisor front end. We talked about their launch of alternative investment platform, a lot going on at Apex. I got some of Bill's opinions on Robinhood's acquisition of Trade PMR, right up his alley, and industry trends. Lots of good stuff. And speaking of industry trends, one of the trends we're seeing is tech stacks are getting more complex. It's not getting easier. It's not getting simpler. It's getting more complicated. And as a group, we have literally seen hundreds of tech stacks for RIAs and broker-dealers. Let me tell you, most of them are loaded down with tech debt. And tech debt can act like an anchor, holding down your efficiency and ability to scale. Now, if you want to free your firm for exponential growth, you need to run, not walk, to our website, EzraGroup.com, and click the golden Contact Us button on the homepage. The experienced team at Ezra Group can evaluate your current tech ecosystem, deliver targeted recommendations, optimize your existing systems and operations, or run an RFP and help you implement new software to get your firm to the next level. Ezra Group just makes tech stacks better. You can take advantage of our free initial consultation by going to EzraGroup.com. Now, the standard housekeeping chores. Please subscribe to the show, yada, yada. Go to our sponsor, the Invest in Others Charitable Foundation at investinothers.org. And if you are a wealth tech software vendor, please go to our vendor portal, ezragroup.com/login, and register to update your product's integration scores. You want us to have the latest data on your products, so your integration score reflects everything you've done, all the hard work. ezragroup.com/login. Now, let's kick this thing off. Here we go. I'm excited to introduce my next guest. It is Bill Capuzzi, CEO of Apex FinTech Solutions. Bill, great to see you.
Great to see you as well.
Where are you calling in from?
Good old New Jersey. I think we're both Jersey boys. So yeah, nice balmy. I think it was 12 degrees this morning. So enjoying the nice cool weather here in Princeton, New Jersey.
Yeah, I keep throwing on more and more layers. Yeah, I'm about 45 minutes away from you, and taking the dog out this morning is just brutal, right?
Same. My dog wouldn't even go outside this morning, Craig. So at least you got yours outside.
I was just in Park City snowboarding, and it's different when you're out on the mountain, even though it's the same temperature. You don't feel it because you've got some activity versus just walking the dog. It's not the same.
Yeah, exactly.
Let's talk. So let's jump right in. So if you could give us a 30-second elevator pitch for Apex FinTech Solutions.
Yeah, great. So we started the company now 12 years ago, and really with a stated purpose, which was, how do we help every person on the planet invest in their future, right? Very focused on retail investing, and you think of Apex as a platform, right? Kind of an old way to think about it, but sort of like the Intel inside. And on one side of Apex is this modern custodian. So think Schwab, Fidelity, Pershing. On the other side, using the same technology, is offering software as a service, right? As this kind of one, modern platform. We have roughly 250 clients, all B2B. We support roughly 25 million retail investors today. And that spans across almost every country in the world. We last year processed almost 500 million trades over the course of 2024. To give that some perspective, that's more than, if you looked at the DARPs for people like Fidelity, for Schwab, for Pershing, that's a lot more than some of them have done in the same period of time.
Yeah, it's huge. I think a lot of this data people aren't aware of. Yeah, 500 million trades in a year is tremendous. That's a huge volume. The as that grown over time, did you see that ever stopping?
Yeah, it's a good question. So again, as this B2B platform, we have clients, again, stay in the sort of the world of retail. We have clients that provide stock picking solutions like a Webull. We support firms like Betterment on the sort of robo side world. Then on the other end of the spectrum, we support traditional advisors, which are not as sort of transactionally. Um, and as having clients that look all different levels and all different shapes and sizes, uh, the growth sort of is consistent with the market. Right? So I would tell you, rewind the tape, 2021, we opened 1 million accounts in a weekend. That's an example, Craig, which is like this gold rush of retail investing. 22, 23 into the beginning of 24, the markets ebbed. There was a lot less activity. And I think we see now sort of at the tail end of 24 into 25, sort of that golden era of retail investing is kind of back in full force. So the transaction volume per client is much more significant than it was this time last year.
Yeah, I see it only going up. More and more firms are adding retail equity trading, like crypto.com.
Yep.
Someone you may be familiar with just
Yeah.
added retail trading. I'm not sure if you know about that one.
By the way, through Apex, yeah. So
Yes, through
crypto.com,
Apex.
they have over 100 million clients around the world. They really smartly said, "Hey, let's connect the dots. Let's connect the dots between sort of the crypto world and the traditional finance world, and provide clients the ability to invest in their future, whether it's a cryptocurrency or it's buying stock in Tesla or a mutual fund or an ETF."
Yeah, I use crypto.com. As one of my crypto platforms. I don't have a lot of crypto, it's a little tiny bit, but that's it. But I like to play on crypto.com because it's got so many options. And I was very surprised last year when it just popped up. Like, hey, stock trading. I was like, whoa, how'd this get here? This is cool.
Well, the neat part is, and let's go back to the ethos of Apex, which is, hey, let's lean into technology, let's build everything real time as possible, and let's make the process of investing for a retail investor as frictionless as possible, or
Mm.
as frictionless as possible. So you think about your experience on crypto.com. Crypto.com already knows Craig, right? They know who you are. They have all of your PII because you opened an account there. Why not press a button and very simply be able to open, a traditional, account that's, managed and
Mhm.
sort of supported by the SEC and FINRA, and allow you to buy stock, right? You can press the button. That information about Craig moves over into Apex. We open the account in seconds. And now you have the ability to move, you sell your Bitcoin,
Mhm.
you get funds, and now you can, go in and buy an ETF or a mutual fund or a stock or an option through that crypto.com platform.
I think it's great because I think some people prefer one application for everything and having to switch back and forth between, let's say, Robinhood and
Yep.
crypto.com. Although Robinhood also does crypto, but
Yep.
everyone's sort of getting into everyone else's business.
Yeah. Yeah. It's funny, think about the broader macro. So that's within this kind of fintech world today, right? Which is like, okay, you have crypto and you have TradFi and then you have robo and you have stock picking. But then take it one step up, which is you have the fintechs on the left and you have, traditional wealth managers on the right. And, we have this weird, at least today, phenomenon where you have to, an individual has to choose, right? And a lot of the choice comes by how much money you have. But you walk up to the door and you say, do I want to self-select and pick stocks myself? Or do I want to hand a check to an individual and have that advisor manage my money for me? And I think the direction of travel for the industry is, why do you have to make that choice? Why do you have to go left and sort of be a self-directed individual, or go right and use an advisor? Why can't there be this sense of augmented advice or hybrid that kind of sits in between those two? That
Fintechs to the
seems
left of me, TradFi to the right. And here we are stuck in the middle, right?
that's it. Yeah.
So You've described in some other interviews 2024 as a year of building the foundation for lasting transformation. So, what did you mean by that? And what are some of the milestones that you saw either through Apex or other parts of the industry that shaped that concept?
Yeah, so let's go back to 21 because it started back then. Is this I talked about the gold rush and retail, and one of the things we saw was um, is sort of what I described, which is the convergence that was happening between the TradFi world and the crypto world. We saw the convergence between self-directed and this advisory, and uh, and the access to real-time data became really apparent, right? That, like I said, the direction of travel is real-time access. And so we made a really hard decision back 22 to say we're going to rebuild the entire Apex platform, build it cloud native, build it all real time, and not be beholden to a batch, right? And so we started back in 22. We launched the platform in 24. It's affectionately called Ascend within Apex. And the whole premise is provide real-time access to information, right? Why does it take days to open an account? Why do you settle a trade T plus one? Why are things logically happening in a batch? Why isn't it real time? Right. So we built the platform from the bottom up, and that core we're building around. We'll get into the conversation around alts, but effectively around that platform called Send, that core, which is real time books and records, real time position and balances that runs 24 hours a day. You now can sort of catapult into this, kind of next phase of retail investing that's coming over the course of the next 5, 10 years with the great wealth transfer that's going to happen.
When you ask the question, why are we doing things in batch? Why are we doing things in T plus one? The answer is, Bill, because we've always done it that way.
Yep.
If you stop, that's how we always do it. I don't
Yep.
understand this need to do everything so fast.
Well, you think about, so let's keep going with that. May not be popular with some of your audience, but you think about this notion of being able to buy and sell stock at 10 o'clock at night.
Hmm.
Why are we stuck into a convention that you can only buy, Tesla between 9:30 and 4? Okay,
During market
yes,
hours.
pre-market,
Because
there's
those are market hours.
right. And in part because the industry is built on batch.
Hmm.
So what ends up happening is the entire industry goes down around 8 o'clock at night, and stuff happens overnight, and then it spits out this notion of a start a day file, right?
Hmm.
Tomorrow at 4 o'clock in the morning, and then all of the brokerage industry kind of feeds off of this start a day file tomorrow morning. Well, why? Why does it work that way? And largely because of the antiquated back end of the inchworm, i.e., the custodian platforms that are out there today. So, back to the question of why can't you buy Tesla at 10 o'clock at night? In large part because the back end of the inchworm, i.e., the custodial platforms, cannot process
Hmm.
a trade at 10 o'clock at night.
I can buy
We're
Bitcoin
going.
at 10 o'clock at night
Yeah.
or anytime.
Right, exactly. Why can you buy Bitcoin at 10 o'clock at night, but you can't buy a share in Tesla? Right?
Well,
That doesn't make a lot of sense.
yeah, there you go. So you talked about you launched your Ascend platform, which is the rebuilt Apex on cloud native, and now it's available. And when we saw
Yep.
that at the conference when you guys announced that. So
Yep.
what capabilities of the platform are most used by your clients, and did anything that surprise you in terms of the adoption or impact?
Yeah, look, part of it is like you got to build this core platform. You got to build sort of all the boring stuff, like
Mhm.
real-time position and balances, the real-time ledger. The sexy parts of it, and I think it ties into your question about what was kind of unexpected. Um, we built the sexy kind of API SDK layer on top of Apex. We created a developer sandbox to allow clients to come in. And probably the most fun for me, Craig, is we had a client that before they even signed the contract with Apex, they were already technically live.
Mhm.
So, so think about that. We were talking to them and negotiating the contract for custody and clearing. And within that 30-day window, they had gotten into the sandbox that we gave access to, had their developers integrated against the APIs and the SDKs, and were ready to go before the contract was. That was such a cool moment. You talk about being sort of a nerd, tech
Mhm.
nerd.
Yeah.
The fact that we could get someone live that can provide access to equities, options, futures, fixed income, mutual funds, ETFs, and do that inside of 30 days is just not something this industry has ever seen before. And it's largely on the back of the platform that we built. So it's not just one thing. Okay, yes, we took a second out of how fast we can open an account. So we went from 9 seconds to 8 seconds. Great, that's amazing. But I think the part that I'm most proud of is the more broadly is okay, the breadth of the product, the depth of the product, and the ability for people to go from start to live inside of 30 days is just amazing.
Here at Ezra Group, we pride ourselves on managing enterprise software implementations. If you told me
Yep.
an enterprise platform can be deployed in 30 days, I'd be very, very skeptical because we've just never seen it before. Although that's a
Yeah.
new platform from start. You weren't converting data.
Right.
You were starting them on, you were onboarding from scratch.
Yep. Yep. Exactly right.
So that
I
saves
think,
some time.
yeah, I think the challenges with the integrations with the Orions, the Investnets, the Advisons, is that if you think about this continuum of APIs, there's roughly 27 different API integration points for Apex, right? It starts with account opening and runs all the way through. Okay, how do I get a confirm at the end statement? And those platforms have all been conditioned, Craig. You know this because you work with all of them. Is that across that continuum, they're only able to consume about a third of the APIs that Apex even offers. The
Mhm.
other two-thirds is fall on the ground, right? And what the industry has been conditioned is the swivel chair, which is like, okay, I'm going to start things on Orion. But when I want to do something with Schwab, I'm going to have to swivel chair over and log into the Schwab terminal to request a check. Um, and the frustration, for me is, hey, why not just, take all of that, plug it into the Orion platform or the Advison platform and allow that advisor to stay in that platform. Like they chose it for a reason. The challenge is that, again, two-thirds roughly of the Apex API set really doesn't have a home, right? A UI to sort of live in. So, one of the other things we launched in 2024 was a platform called Astra, which effectively takes all 27 of those APIs, plugs them all into a front end, and allows for an advisor to just basically do all of the things that they need to do in a much more modern way with kind of this fintech tech forward custodian versus what they have today.
Would you call that Astra the advisor trading platform?
It's exact. Well, I wouldn't say necessarily, yes, trading for sure, but it's much more than that, right? So if they want to open an account, they can do that. If they want to,
Mhm.
go into the client's home, they have an iPad, they can literally sit right next to the client with Astra, put in that client's information right next to them and open an account in seconds, no paperwork, right? The second part is they can then take the client's credentials, banking credentials, place them into Astra, and fund that client's account in seconds. Right? Just that notion of being able to do that alongside the client without having to go through DocuSign or send sticky yellow stickies and FedExes, that can all be done now electronically on the Astra platform. It'll do all the trading and allow them to cut checks and do wires and all the other things. And it'll, obviously kind of that full service platform that they would need in order to support sort of what they do with that end client.
That's been a pet peeve of mine for a few years that the big three, formerly big four, now big three RIA custodians don't have straight through digital account opening. You still need to you need to task switch onto their website to finish the account opening process. Now, they they give some availability of that to the very largest clients. They give the very largest clients the ability to use their own DocuSign version or their own digital solution. But for the vast majority of clients, they can't do it. Now they're promising that that's going to be available soon, but I think you've got a bit of a head start there.
It still kind of confounds me. I love it, by the way, as
Mhm.
it creates, competitive distinction. But it's amazing to me. Here we are, 2025, and that's still the case, right? And even in a best case scenario, it's sending some weird DocuSign, right? That doesn't need to work that way, right? There's such thing as e-signature, and to the extent that a client checks the box and says, "I attest to this," and you create kind of unique workflows that allow the advisor to start it and send information to that end customer to accept it. There's no need for swivel chairing into other platforms or sending DocuSign to people's email addresses. That's called friction, right? Those are reasons why people don't open up an account, because it's like this is just too hard, right? And I think from the 25 million clients that we support today, I think we have done a pretty good job of perfecting that process of how do you open an account seamlessly and how do you fund that account seamlessly. And it is amazing to me, Craig, that today we still have that strong distinction. And I think part of the reason we said, hey, we need to do what we did for fintech and really apply it to the traditional advisory world, because there's a need for us to sort of modernize what's happening on the sort of right end of the spectrum.
Just 20 years ago, we're going to switch gears to alts. Alternative investments 20 years ago, globally, are about 5 trillion in assets, or 6% of global AUM, with hedge funds being most of that.
Yep.
Now, move forward 20 years to today, alts are around 22 trillion, or over 5x globally, 15% of assets under management, but hedge funds are only 22%. So private equity, private credit, real estate, and others have filled that gap. That leads me into my question about the upcoming launch of Apex Alts,
Yep.
where you are throwing out the buzzword, or you're democratizing alternative investments. We've heard that many times. Tell me what that means to you, what drove this decision, and why is now the right time for you guys to get into this?
So, so you're absolutely right. There's been an explosion on sort of in this kind of broader category of alts. I was talking to somebody today. You kind of can't have a conversation in our industry today without hearing AI, crypto, which is kind of back in vogue, and alts. Those three things seem to make their way into some conversation one way, shape, or form. The challenge with alts, though, is it's like herding cats. So you just talked about a bunch of categories. It's not like, okay, I get access to the equity market and I have access to every US equity that's out there. They're all over the place, right? Whether it's real estate, like you said, private equity, you have private, just private companies like SpaceX that have shares that are available. And the challenge is for the masses, right? Let's go back to our purpose, which is helping the person, planet, best. The access to those is still incredibly difficult, right? So what we said is, look, we're not going to get into the world of supply, right? So KKRs, the Blackstones, the ICAPs, right? The Cases, DTCC has a platform. Great. They're all providing the supply. What we're trying to solve for in Apex Alts is connecting demand to the supply and do it in an incredibly efficient way, which is API-based solution, pushing out through our 250 clients that use Apex on a custody basis, and allow them to get to Craig, the individual, and say, Craig, are you interested in alts? Yes, I'm interested. Great. Are you accredited? Do it in a standard way. Do it in a sort of compliant way with SEC rules to get you accredited via electronic means. Great. You check that box. The next part is, okay, now show you the supply. What are you interested in? Right? Let's talk about real estate. Let's talk about private equity. Let's talk about the shares in SpaceX that are available. Okay. The next part of it is, okay, now you're accredited. You've now shown that person the different avenues to invest in an alt. Now it's about buying, right, or selling that alternative, provide the ability to do that. And lastly, and probably the most important part is, and put it on a statement. Make it part of that person's, we talked before about crypto.com. Well, put that same alt in the same container alongside their equities so that there's not this one-off. I mean, I don't know if you own any alts, but I have a couple of funds that I'm involved in, and I get these weird emails. I have no idea what I own, right? Because I bought into these funds a number of years ago. And uh, if I don't have good records, I don't even remember that I own these things.
Mm-hmm.
If you could see those things displayed inside of your custody account, right? And displayed on the same thing you saw your Tesla shares and your ETFs.
Mm-hmm.
So that's what we did. We built that platform. It's called Apex Alts. And effectively, it's in a really efficient API way, connecting supply and demand to supply. Does that make sense?
Absolutely. Everyone's doing it. All your custodian competitors are launching alternative platforms to keep it all in one place. The question is, there's also a number of independent solutions, many of them out there, that are alt marketplaces for different types of alts. Oftentimes
Yep.
we see them starting off with one thing like structured notes or annuities
Yep.
or private credit. And then once they get a little bit of traction, they start adding more so they become a full-fledged marketplace for everything. But how many of those can the market bear? And when do we run out of quality alternative investments? Because a lot of advisors want to get their clients into alternatives for the alpha that they can generate, besides just the correlation issue. So when does alpha run out?
Yeah. Look, that's a great question. I will tell you that um, it does feel like the industry is in a position right now where supply is trying to drive demand. Um, there's a lot of different alternatives that are out there, and the question is which ones are appropriate for retail investors. Uh, the challenge is, and then the second part to your alpha question is, because there's not one place that provides one clearinghouse for all alternative um, investment options, it's really hard for a retail investor to make sure that they're choosing the right alts for who they are. Part of it, and I'll go back to what we said was like, look, we'll connect to everything. All right, we'll connect to Case and ICAP and KKR and Blackstone and DTCC. Um, and then we'll allow our customers, right? So SoFi has access to SpaceX shares. We'll allow them to basically pull that supply in a sort of compliant way, standardize it, and display it for the customer base. It is going to be really interesting, though. I will tell you, if you fast forward 5 years from now, I think there's going to be a bit of reckoning around this notion of suitability, right? Because I don't think all alts are created equal. I think there's going to be some that are much more suitable for clients than others. It does feel like there is going to be some reckoning on the other side of this.
Like any industry, there's going to be periods of consolidation and expansion as people pile in, as money piles in when they see opportunity. Lots of companies get started, and then they get a little bit of traction, but not enough to be to continue, and they start to consolidate, either closing or most likely most of them just get merged or acquired by the
But,
firms.
but look, the one thing I will say again, Apex is a privately held company today. Um, the prospects of going public, there's alternatives to going public. And I think one of the kind of cool parts is this world of alts provides, again, supply and demand and actually connects the dots, right? Because who could access the ability to buy shares in Apex today? It's insiders. It's people that
Mhm.
work with Apex, it's employees. But what if we could provide access for people outside of Apex to buy shares in Apex? Um, it provides an avenue potentially for a company that really has historically always been the IPO market. So what if there was a better way to raise money and you didn't have to go down that path of an IPO? Um, this alt world and providing access, presents opportunities both for the companies, right, the issuers, as well as the retail investor.
So are you planning to offer shares of Apex on Apex alts?
We definitely, it's one of the things that we were considering is doing a bit of a tender offer or something of Apex shares. We'll see. We'll certainly have the ability to do it. The platform will certainly be able to do
It might be a lot less regulatory hassles than the SPAC you were looking to launch.
that. Oh goodness, yeah, never again. That was that
Not a good
was good
experience for you there,
learning.
Bill?
It was a year of my life that I don't think I could get back. So
Hmm.
so yeah, definitely a good learning experience. Yeah.
Yeah, would have been better just to go skiing and put the whole SPAC thing on the shelf.
Yeah, no
But,
kidding.
but I think that would be a great idea to offer shares in Apex through Apex alts. Uh, some of your clients may be interested in buying it.
Yep. Yep. Same with their own shares, right? If they were to offer, public.com, private company that wanted to offer some shares out to, people that are using the platform, now we have the ability to do that, right? The question is, what's the fair price for it? But, those things are solvable, right?
Mhm.
And so I think it's interesting that you now have the ability, to sort of create access to these private companies when historically it was either kind of destined for insiders or people that had a lot of money. That's the biggest challenge is that
Mhm.
is ultra high net worth has been sort of the folks that have been accessing the alt world.
Mhm. Those are the traditional barriers of alternative
That's it.
investments, right? That it's also a very high cost to buy them and operationally complex. So will Apex alts address this at all? Make it easier, faster, cheaper?
Yeah, I mean, certainly it's going to make it faster and by and large cheaper in that I'm going to take out the noise of, okay, is it an SPV or is it a direct list? I'm going to standardize the access to the alts, right? And I'm going to make it simple for you. Let's just say Craig's on crypto.com and they start to use this, this alts platform. You're going to click a button. It's going to say, are you accredited? You're going to answer 3 questions, 5 questions. And that's going to register you as accredited. It now knows exactly who you are. Your PII is already, sort of registered. You can now open an account, you get access and be able to click through, find the things that are interesting to you and buy. So the barriers to entry will come down for sure for Apex that use this platform, Apex's clients. And the costs related to the transaction itself will come down. Right now, the intrinsic costs and what's the bid ask in terms of a SpaceX share, right? That is beholden by the issuer. But as far as the friction as it relates to you getting access and the costs related to that, for sure they'll come down. And just like a bunch of other things, whether it's fractional equities or fractional fixed income, we're going to set the mark as to how to do this. And what we'll see is, right, you mentioned other custodians. Imitation is the best form of flattery. So what we'll see is that people will fast follow what we're doing, right? And copy the playbook, which is fine. It's totally fine. It means we'll democratize access to alts.
It's going to happen whether you want it to or not. So you might as well be ready for it.
That's right. Yep.
Speaking of competitors, you have a new competitor or a new competitor that's now bought into the business. Guys, want to get your quick comments before we go. What are your thoughts on Robinhood acquiring Trade PMR?
Yeah. Look, I thought it was great in a lot of ways. So I think Ray, the last time you and I talked about this years ago, um, I had said that this kind of convergence between barbell. Our industry has been barbell. You have leading edge fintechs on the left, do-it-yourselfers, and you have traditional advisory on the right. And there's been players sitting in the middle, Facet Wealth. We have a new client called Wealthmore. There's a bunch of folks that are pushing from right to left. And then there's people that have been sitting over on this side, moving from left to right. So adding advisory, adding capabilities like SoFi. This is just the next piece of that puzzle, which is It's not surprising at all, and it kind of validates what I've been saying, which is right, this hybrid, not hybrid broker dealer advisor. I'm talking hybrid between somebody that wants a digital experience, but also wants to have access to advice. And you can see it. It's a modern version in a lot of ways of Schwab, right? Where there's a B2C component and there will be an advisory support model. And I think it's good for the industry. It's making folks like Apex continue to stay on our toes and keep driving forward. The distinction between us and that is, at least for the foreseeable future, we will stay very focused on B2B. Right? I don't want to compete with the advisors that use Apex. I don't want to compete with the broker dealers that use Apex. We want to stay very focused on what they need to compete with the B2C folks.
I'm sure that makes your clients very happy to hear that.
It does.
But we've run out of time. In fact, we're a little bit over. Bill, where can people listening find more information about Apex?
Yeah, go on our website, apexfintechsolutions.com, or you can find me, Bill Capuzzi, William Capuzzi on LinkedIn.
Fantastic, Bill. Thanks for being here.
Great to see you, Craig. Thanks for having me.
Hey, it's Craig again. Here are my top 3 or 4 takeaways from this episode. Apex launched their Ascend platform, which is their cloud-native rebuilt of the entire Apex platform, real-time books and records, position and balances running 24/7. One of the things I was pressing Bill on, and it sounds like they've got it covered, is enables client onboarding in as little as 30 days, which I find to be impressive. The Astra Advisor platform, their front-end solution, utilizing all 27 Apex APIs, which we like. As I mentioned, it's eating your own dog food. You want to use your own APIs that you offer externally for your internal application development. Now we know they work. And Apex Alts, a lot of custodians are launching alts platforms. We're seeing it everywhere. Sounds like a good product. And industry trends, the convergence of traditional finance and crypto. Haven't heard a lot about crypto, but I think it might be making a comeback. And that's it. You've reached the end of another episode of the Wealth Tech Today podcast. Thanks for listening. But before you go, please head to our website and scroll to the bottom of the homepage and sign up for our newsletter. Once a month, you'll receive an email chock full of wealth management goodness, news, information, and updates. You will not be disappointed. Thanks again for listening, and talk to you all again next time.